The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and the Diagnostic Trading Hour is where we teach you how to minimize risk, maximize leverage, and stay one step ahead of the markets. And in diagnostic trading, we go into fundamentals, we go into seasonals, we go into technicals, and we go into statistics, or what I like to call the diagnostic deviation levels. So if you haven't seen the diagnostic deviation levels, I'll go ahead and post those. If you're on Tiger TV, if you're in the Tiger's Den, you can check those out right now. And I'll go ahead and put them up there on the screen for you. And let's see here. Here you go. And so go ahead and check those out, and you can see today's deviation levels. And we went ahead and we put a smoothing indicator built into the deviation level, so that ensures that you don't get these big weird spikes on random days. And what the deviation levels are is they build in implied volatility. Okay? When you look at a standard deviation level, then what you're looking at is historical activity, which means nothing. It's what happened yesterday. Okay? You need to be looking at what does the market think, not what do you think, not what does, CNBC or MSNBC or whoever think. What does the market as a whole believe the market's going to do? And I don't mean direction, okay? I mean how far. What's the, expansion points? So how far should the market move today? Well, how in the world do you know that? Well, implied volatility is the premium, basically the verbiage used for the premium built into an option for any underlying market, whether it be Apple or Google or the S&P 500 or gold or oil or whatever, of how far the market thinks the market's going to move. And so, like right before an earnings announcement, you're going to see options get a lot more expensive because their implied volatility goes really high. But then the big move happens after the announcement comes out, and then the implied volatility goes really low because that big move is no longer expected to happen. Okay? So if you can extract the implied volatility, you got to pull it out for you can't just use 1 month. You got to pull it out for multiple months, all right? And you got to pull out, there's 4 different implied volatility numbers you got to factor in, and there's a lot of math. But we make it really easy, and we post these up here for you so you can check them out, and we'll be posting them inside our site as well so you can check those out. And anyway, so what we do is we take that, and then we factor it into a deviation formula after we get that number. And built these specifically for shorter term trading. So, really, 5 days, 1 day, that type of thing. So very short time periods for movement. And they're just uncannily accurate. Why? Not because it's some magical algorithm. It's simply because it's what the market says as a whole that the market's going to do. And you can use these in a lot of different ways. So you can use them as take profit levels. So let's say when it gets to 1 deviation, you can say, that is a take profit level. I'm going to take profit when it gets there. And 1 deviation is basically 68% of all the price activity for the day is expected to be within a plus or minus 1 deviation. So, there's only a 32% chance it'll break out and stay out of that level all day long. So it's a really good place for you to go, if I'm buying now, where do I want to take profit? On the way there, like a 0.5, a 0.7 might be where you tighten stops on the way. And at 1, you may want to take some profits or at least definitely tighten your stops. And, if I go over here, like right now, we have a deviation level 1449 over here on the S&P. And 1449.5. And we can see it went up right to 1450.75 there. So right when it went to 1449.5, and it just stayed at that deviation level all morning long. And so that's one way you can use them. Other ways, you could do straddles on them. So you could go in and let's say you're looking at binaries or spreads over on Nadex. And you could go, I want to find a straddle that I can put on. And so last night I put a straddle on. And let me show you here. I still have one side of the trade working. But I can do, let's see, I'll pull it up. By the way, if you don't have a Nadex account, hop on over, go to TFNN.com, and click on Nadex. And when you click on Nadex, then you can get a demo account, and you just go right there and click on Demo Account, and you can fill that information. It takes like 15 seconds. They'll give you $25,000 of funny money with. They'll give you a couple weeks of activity that you can take advantage of. And so just fill that in literally 15 seconds. So you put in your username, your first name, your last name, your phone number, your email address. Click Apply for Demo. Now, they're going to send you a password, so check your email as soon as you do that. All right. When you check your email, just a little tip for you. There's a 0. A lot of times there'll be an O or a 0. People don't know which one it is. It's always a 0. So just if you got 1, 2, 3, 4, 6. It's 1, 2, 3, 4, 6, 0. And then you can log in, so you'll have your password. I recommend as soon as you get that password, log in and change the password to something you're going to remember. You made your username, you didn't make your password, okay? Change that to something that you can remember. Now, also, you can fund an account. Just click Create Account. Go over here and click on Start. As soon as you click Start, within 5 minutes of start, you can be funded. So how much does it take to fund an account? Well, it only takes $100. Of course, I recommend putting in more, like $500 or $1,000. But if you're just getting started, you can literally put in just $100 to open a live account. Well, what's the benefit of a live account versus a demo account? Well, with the demo account, you're going to see almost everything the same as a live account. But there's other demo traders in there. So they're pulling information off the live exchange, but let's say somebody has that $25,000 in funny money, and they decide to take the entire market out, okay? Then it can mess up the bid-ask spread, stuff like that. Whereas in the live, you'll actually be able to see what's going on. So I recommend, even as the second you sign up for your demo, go ahead and get that live account going. Again, 5 minutes, start to fund it. And once you've funded a demo account, then there's a way to actually get it extended. Just go ahead and email me, okay? And, my information is right here on the website. Just email me if you want to know how to get your demo account extended as soon as you funded your account. So that way you can have like a year to trade on your demo while you're trading on your live. Because sometimes even as we're trading live and we have our trading systems we like to put in place, it's good to test out new things. Especially like I'm going over things all the time on here on the show, and I'm giving you different ideas, trading ideas. And of course, I always recommend that you test things out in a demo. It's the cheapest way to learn. Okay, live is an expensive teacher, and so you want to be able to take advantage of that as you're doing it. Well, anyway, so last night I put on a straddle trade. And let me pull that up over here. And so I'm going to go in here, and I'm going to go into my order history just so you can sort of see the orders here. And open that up. So right here, you can see I went in, and I also put my take profit orders on. And I put in an order to sell the 1424, okay, binary, the daily 1424 binary on the US 500. And I put in an order to sell it up at $83. That gives me a $17 risk. Well, how do I know that so quick? Well, it's pretty easy. All of the binaries have a value of 0 or 100 at expiration, okay? They can't be worth more than $100. They can't be worth less than 0. So if I sell it at 83, okay, and obviously I want to buy back lower to make money, right? So if it goes up in value, the highest it can go in value is $100. So $100 minus 83, it's a $17 risk. So I had a $17 risk on one side. And then I also bought. So on this trade right here, let's see here. Okay, I bought the 1448 at 1750. Well, remember the bottom is 0. It can't go lower than 0. So if I bought, of course, I want to sell higher. So I bought at 1750. And if it went down, worst case scenario, I lost $17.50. So basically, I'm looking at about a $34.50 risk on the trade. And I can go in and do the trade, and I'm straddling. I'm saying, hey, I think the market's going to go up. I think the market's going to go down. I don't know what way it's going to go. But you know what? It's earnings season, so the market's going to go somewhere. And so how did I pick those strikes? How did I pick this 1448 and 1424 strike? Well, I hopped on over, and I looked at the deviation levels that we were just talking about. So right here, I was like, okay, 1448. Well, there's a one deviation is 1449.57. So, hey, 1448, that's actually even before the deviation level. That's great. And then I went over and I looked at the 1424, and 1422, or basically 1423 when you round it off there, is one deviation down. So, you know what? 1424 is perfect. So I went in and sold one and bought one. And then as soon as I put it in, I had a take profit order I put in. You can see these orders. So I put in an order on the long side that, hey, if it gets up to $45, sell my long trade. That'll not only cover, it'll remove my risk on my long side and lock in profit, but it also gives me the money to cover my original risk on the short binary, the binary I sold. And then I put in an order that you can see is still working right now, okay, on the sell side. So in case it did go down. Now, every once in a while, the market goes nuts, and it flies up a deviation and back down a whole deviation. And that's a massive move. I'm not going to say it happens often, but it does happen. And so I'm just going to leave that thing on. I have no reason to take it off. And now if the market comes back, I might decide to get out. of the original trade if I want to. But right now I have it set to take a nice profit on there, and if it does come back. But I've already taken my profit. And you know when I did that? Let's look at what time I actually put this trade on. So I put this trade on at 8:40 Eastern time. Okay, that's literally when I placed the trade. So full-time job, somebody has a full-time job, they're working a 9 to 5, right? I placed this trade, I went to bed trading on the futures market, and I didn't think twice about it. Okay, so I was like, you know what, I can obviously risk $37 a contract. Now, I did one. You could have done 10, 20, 30, 40, 50 contracts. You did as many as you wanted to. You did 100 contracts. So whatever the volume is there that dictates that allows you to trade. And so I went in there and I put that trade in, and I've had no problem getting my fills on trades. And anyway, so I put that on. I got up in the morning, boom, it was filled. So you can see right here, when it came in, it got filled just, actually didn't get filled first thing in the morning, but I got up, I came up, and it wasn't filled yet. I went out, I got some breakfast, I came back, and right there, 11:30, so 10:30 Central Time, 11:30 Eastern, my order got filled. I took profit on the long side of the trade. And we can look over here at the S&P, and you can see right there when it hit 1448, and right there at about 10:30, 11:30 Central Time, okay, 10:30 Central, 11:30 Eastern Time, is right when it got filled, right when it got to about 1448. So literally the trade took me a matter of a few minutes, and I made a great return on this trade on a very defined risk that I could easily live with. So well, in fact, that I could trade futures while going to sleep. Now, I put this on the binaries. You could also put it on the spreads. And there's a lot of different trades that you could do it on. I have a list right here. This is just the S&P, but we could literally go through, and I have I grabbed all of them last night of all the contracts. And you could look at literally, all the different ones that they would have worked on. So any of the ones that have hit it, deviation level, definitely, would have worked on for that trade right there last night. And so that's just one of the many different ways that you can trade on the Nadex platform with completely defined risk. And the next thing I like to do this every day, is just get you updated, just in case you're out there and you're on, TFNN.mobi, you're listening in, and give you an update on where is the market right now. Well, the S&P is up 14 points. The NASDAQ is up 38 points. Really moving right there. We got the Russell up 4.3. We got the Dow up 117. Copper is basically flat on the day. We got silver is up 0.5%, 0.167 there. And we got gold up $7.80. And we got corn is flat, which is, man, the ags are quiet right now. So compared to yesterday's close. Soybeans up 5 points. And looking over at our energy sector, we got oil. Oil was pretty flat on the day. It's had a little bit of movement, but right now it is just down 5 cents. Natural gas is down 0.041. That is a little bit over a 1% move. So natural gas is moving. It keeps moving. And you can trade, by the way, all the markets I'm reading off, you can trade on the Nadex platform. Stay right there. I'll get you updated on the currencies, and we'll talk about some of the fundamentals that came out today. See you right after the commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Now, if you have any questions at all, do not hesitate to give me a call right here at 877-927-6648. Again, that's 877-927-6648. If you're outside the U.S., you can give me a call at 727-445-1044. And going ahead and getting the update done there on the markets and where they're sitting at right now. We got the euro dollar up 101 pips, so euro dollar making a nice move. We got the pound dollar up 45, the Aussie dollar up 13, U.S. yen is up 26, and the U.S. franc is down 62. U.S. Canadian is up 51 pips on the day. And like I said, each and every day I'm usually covering the Nadex markets here, and I'm looking at their underlying markets, and these are the markets that you can trade over on the Nadex platform. Now, let's go ahead and check out just looking at some of these deviations and where everything is sitting at right now. And so let me go ahead and I will pull up a chart, and we will zoom in on it and look at it just so you can learn and see how these things work. All right, so right now we got the S&P, and as I mentioned earlier, we want to look at these deviation levels. So I'm going to pull them off the screen so I can show you that chart right here. And we have the S&P, and so we went in on the S&P. Like I said, I did a straddle last night, but let's just say, you went long. Well, the first level it got hit, you went in this morning at 1442, and so, if you're in last night, great. If not, then you're just sort of riding it up at this point because it was moving up overnight. But if you're in last night, hey, at this point it's time to tighten my stops from that last volume breakout bar, which was right here. You can see that volume breakout. And so it's moving on up, and then we go over. And by the way, I do like to look, if I'm looking at bar charts, I like to use a unique type of Renko bar. But let's just say we're looking at, this normal 10-minute bars here. And zooming on in. Okay, so we got that volume breakout right there. That broke that 1442, that half deviation level. We moved in, we tightened our stop, and then it went on up to the 0.7, which was 1445.5. And so we hit that right here. So again, we got another big volume bar. We tighten our stop right there. And then it goes up and it pushes up on the one deviation, which is 1449.5, which we're sitting at right now. So the last volume bar we got on that was right here, so we're pushing it up at least to 1447 for tightening our stop. At this level, you could be looking for a reversal. You could also be looking for it to go even further. If it does go further, then you might be looking for 1.5 deviation. So if you're ever looking at our deviation charts, then you can look at the +1 deviation and add the half deviation to it. So like 14, 49.5 plus, basically 6.5. And just add that number together, and then you'll get 1456 as being a potential, next target level. What I do notice, though, is looking right here is this volume bar was definitely significantly lower than this bar up here. And so whenever you're seeing a volume bar that is dropping down on a breakout on what I call the apex pattern, it's simply a pullback and then, move higher in that direction. So we got a pullback, we got a lower high, and then we broke out of that high. And on that breakout right there, I'm seeing, like I said, lower volume. So that doesn't give me a whole lot of excitement of a continued uptrend in the day, and would actually tell me to tighten my stop, possibly take my profit, and potentially look for a reversal. And now, why would I look for a reversal at this point? Well, I need to see a couple other things. All right, I am definitely looking for a potential reversal at this point because we have much lower volume on the most recent breakout, and we've hit the deviation level. Now, what I would like to see is I'd like to see some volume really push into the downside. We haven't got a whole lot of that yet. I mean, we had a decent volume bar right there that was a down close bar. And this bar right here was pretty much just, it's a doji bar right there. And then going on over, we're not seeing a whole lot. So I need to see a little bit of a down volume action to, pull the trigger on a downside trade. I definitely would have my stop on if I hadn't taken profit already on my upside. But you could have your stop on. Now, one of the great things is if you're in the spreads, there's a lot of movement you can take advantage of. So not only like 10 points, but you got 30-point wide, 40-point wide just on the S&P that you can take advantage of on the spreads. And you'll be able to get access to this soon and check this out, but you'll be able to go over here and click on the box spread scanner. That'll open up for you. Let me log into my account, and I'll show you exactly how it works. And then you can just basically narrow it down. And so I've been having some people, look over this, and we're getting it all perfected for you. And we got to update that. All right, well, I'll update it, and I'll show it here to you in just a second. So we're just about to launch the site out, so I think they updated everything on the site. But anyway, so you go on there, and it'll literally show you exactly how it works. It'll make it easy for you to narrow it down, and you'll be able to find the spread in literally a matter of seconds. So you can go in, and you don't have to, be limited by the binary. They're great, they're fun, they're easy, they're simple, but they do limit you. They're $100, right, at most in value. And so you want to be able to find trades that don't necessarily limit you whenever you're looking at the trades. And so you may want to go over and look at the box spreads. And the great thing about the box spreads is they're like trading the underlying market, okay? And what I'll do is I'll bring that box spread scanner up. I'll show you exactly how that works. And then we'll start rolling through some of the other markets right after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
I mean, it can get wide. So I mean, it could be $1,000. So wide. So this limits it down to $100 or less risk. And I can say, you know what, for every dollar I'm risking, I'd like to make at least $2 on that trade. You know, potentially have a $2 potential profit on the trade. So it'll get rid of any trades that don't qualify for that. And I could say, you know what, I think it's going to take some time. We're during the lunch hour, and so you know, I want at least an hour. Okay. On any potential trades that I'm going to look at. So 60 minutes till expiration. Okay. And I can go, okay, well, what are my potential choices on buying a spread? Well, this one right here, if I click on it, it'll highlight it for me. It makes it really simple. And it'll update it, and it'll show, okay, well, on that trade, I can do this. There's only has to be 1.5 points of basically premium to get to break even. $21 risk, $75 reward on that trade. And that gives me a reward risk ratio of 3-to-1. So every dollar at risk has a potential to make $3. And that's if it goes up to 1460. Okay? So I want to look at two things here. How do I know 1460? Well, that is the ceiling right there, the spread. See, 1460. So I want to look at, again, distance to break even before I look at my risk. All right? And I want to look at, okay, maximum reward is good, but what is my expected reward? Okay? And, again, maximum reward is a great thing, but expected reward is, in my opinion, even more important. And so why is that? Well, because it doesn't matter if I can make 77. Will I make 77? Do I think it'll get to 1460? Okay? Because sometimes you'll have these things that go way up, and it's just not even within a deviation realm of possibility. Well, 1462 is actually a 2 deviation level move up. So that definitely is a possibility. And so if I want to do this trade, if I thought, you know what, it's going to break out, it's going to go higher, then I could, and I'm not looking at this trade right now because I'm not seeing the volume to back it up at the moment. Okay? And by the volume, I mean, again, look right there. You see that pull down right there? This volume is significantly lower than the last several breakout volumes that we've had. And you can also see how it's pulled down. And I really don't see volume like intensifying at the moment. I want to see volume break higher than this volume level that we had right here. So I'm looking at, I'll zoom in on the chart for you, make it a little easier to see. I would really like to say, volume break, or at least be close to 44,000 or so, if it's going to move higher onto 1460. If I think this thing can actually punch through and move up another 10 points, then I need to see a volume bar that's going to break the 1451 level here, with, some conviction. And if I did see that, then this would be the spread that I could look at. It's only an $18 risk on one spread. And 5 spreads combined on the US 500 contract. And we actually have a little thing over here that tells you that, buy 5 spreads to one S&P contract. So 5 spreads combined would actually allow us to mirror in the sense of a 1 point move on Nadex on one spread is $10. So you basically, if you go from 14.59 to 14.60, okay, that's a $10 move. Well, a 1 point move on the futures is $50. So if you go from 14.59 to 14.60, it's a $50 value move. So if it's $50 on the futures and $10 on the spread, how many spreads do you need to equal one future? Well, 5 in a 1 point move. So if the spread moves 1 point and you have 5 of them, then that'll be a $50, potential profit or loss in either direction. Except for on the spreads, of course, you have capped risk. And so I could buy 5 of these. That'd be $100 risk on this trade if I chose to make this trade right now. And it's really simple. So I just go in, I click buy on it. Let's see if I have it on my demo here. Yeah, I got my demo. And so I click buy. It'll open it up for me, and that'll allow me then to place 5 contracts on the Nadex platform. And it's just, it's very simple, very helpful, and it makes it where it's very, very easy to trade because I don't have to go back into the platform and look for it and find it. Now, on the other side, maybe I want to go short. Okay? So maybe I think that it's not going to keep moving up. Maybe I think it's going to start moving down. And we're right here at this 1450 level, and really these are a straddle. Look at this. Okay, see how it sort of straddles the market right there? And so maybe I think the market's going to go back down off this 1450 level. We're not getting a lot of conviction on the volume. I mean, it did build up a little bit there, but now it's starting to turn around and go down. So I can now sell this spread instead and just take the short trade. And that gives me $20 risk, $80 reward. That's what I do in sort of like, I'm not going to say the same, obviously, at all, but there's a similarity in doing the binary because it's a $100 value. And on that spread, because it's 100 ticks wide. Every tick on Nadex is worth $1. So if it's 100 tick wide, it's a $100 wide spread. If it's 300 ticks wide, it's a $300 wide spread. If it's 1,000 ticks wide, it's a $1,000 wide spread. And so I can go and I can look at the different trades, and I can even compare them side by side. What would be better, a spread or a binary? And I could compare, okay, well, what would it cost me to get, a $20 binary, and how far would it have to move for me to make money, and what would I make? Now, the difference is this trade's in the money, okay? Meaning it's inside the spread, and it's not an all or nothing. Binaries are all or nothing at expiration only, okay? Only. So at expiration, they're going to be worth $100 or $0. That's it, all right? But before expiration, you can get in and get out when you want to. Like at the beginning of the show, I showed a straddle that I did. And I got in, and I risked like $17 on one side, like $17.50 on the other side, and then I put in a take profit order for like basically $45 on the buy and like $55 on the sell or whatever. And so that's exactly what I did. And so I had the trade in there, and it got out before expiration. I didn't wait for it to get up there and then fall back and turn into a losing trade. Now, spreads, you can also get in and get out whenever you want to. And they move with the underlying market. What's the driver? It's not the volume of the spread that drives the price. It's the movement of the underlying. Okay, so if the S&P goes up, the spread's going to go up in value. If the S&P goes down, the spread's going to go down in value. Up to its maximum value on the spread, or down to its minimum value, which is 0 on the spread. And so there's a lot of different ways you can take advantage of it. And we'll be going into more and more details as we roll out a lot of tools and things for you to be able to use here on the Nadex platform. But right here, we got this. So let's go ahead and let's wrap through a few other deviation levels so we can just sort of look at what's been going on today and where we're at right now. Like I said, right now we're at a definite resting point on the S&P, and we really are not seeing any kind of conviction on the breakout. So that's a definite potential reversal signal. And it can be deadly to do reversals on something like this if you're doing outright futures. Because you can go in there and the thing could just, but if it breaks, it could break. It could just take off. We've all been there. We've all experienced it. If you've been trading for any period of time, you're like, oh man, this is definite support. This is definite resistance. And so you go short at the resistance level, and then all of a sudden, it just spikes against you and knocks you out of the trade. Well, sometimes it spikes against you and comes right back down after it knocks you out of the trade, and that's very painful. Well, that doesn't happen on the spreads. You can go in there and you could actually do a reversal play with defined risk. And so it's a very cool way to trade. Also, you can even do a straddle right here. Like I did a straddle this morning down here. You can do a straddle right here because you're at that deviation point. So if you think, hey, it's definitely going to move off of this level. Now let's go ahead and let's check out some of the other indexes. We're right now looking at the Russell. And Russell, we had to move expectation up to 1834 and then further up to 1837. We did just about hit the 1834 level. 1832.9 or 0.2 was our first level right here. We obviously hit that in the overnight there. And then we almost moved up to 0.7. So the Russell really trading pretty quiet this morning overall. And but not quite up to the 1837 as of yet. So really seeing a lot of quiet activity, and it's not moving a whole lot. Let's go ahead and check out the NASDAQ. On the NASDAQ, we had to move on up to 2774 point, I don't know, was that 5? 2774.5 on the high of the day right now. And so looking at that, we had a expectation of a move up to 2747.25. And obviously we hit the 2747.25. That was our half deviation. Then we moved up to 2753. And of course we definitely hit that. And then the expectation was to move up to 2762. And we hit that, and you can see how that served as basically a support, now resistance now support level. And then the next expectation would be as high as 2791. We haven't quite got there. So if we do want to do a 1.5 deviation, then that'd basically be about 15 points plus 2762, so 2772, 2777. And so we got pretty close to that. But right here is where you would have put your stop. You would have tightened your stop, okay? And now you're waiting. Now you did get a volume. You got a nice volume bar on that breakout. So now you're waiting to see, is this going to turn into a reversal, or is it going to keep moving? And it did the pullback, but it has not shown any strength back to the upside since that last breakout. And so you're definitely have tightened your stops, and you're looking for a reversal. Now let's go over here. Let's check out the Dow. On the Dow right here, we got to move on up to 13,488. And looking over here to the Dow, we got to move 13,4, let's see, 74 was our one deviation move all the way up. And so it's pretty much, right on the money there. 13,474 would have been a move to, I guess, this level. It basically hit that first thing and then just has been really chilled out. Hasn't done much of anything since it did that major move right there off of the earnings in pre-market and early morning trading. So, and then looking on over and checking out, copper has been pretty flat on the day. It's already pretty much done for the day. So you can see right there the pit trading hours and have closed down. But we got to move down to 3.6862 or so. And looking over here on copper, 3.6862. I mean, really nothing. And we were talking about that when we first opened the show, saying copper is just deadly silent today. And so very choppy whenever it's like that. And then looking over at silver, we're not seeing any major silver moves, but I can look at them and see if we got anything. 33.02 would have been a half deviation move. We did hit that half deviation move right here. And so you would have, if you were long, you'd be tightening your stops and you'd be out. Then it basically just went on back down and pretty much flat right now. Looking over at gold, we got a little bit of a move in gold, though a lot of that happened overnight. And it did give you a pullback chance for a move back up. And looking over at the gold contract, we can see a move on up to 1749. And on gold, move up to 1750.07 would have been our 0.7. So you're talking 1 point away from the 0.7. And it definitely broke the 1746.9. It did that really first thing right here in the morning. You see it hit that. It broke it, and then really that's where it's been at all day on a half deviation. So we really had a half deviation day there on the metals. And looking over at natural gas. So natural gas has been moving quite a bit today. And move right now, we had to move on down to 3.408 on natural gas. 3.40 was our one deviation level. So literally only 8 ticks away. At the 0.7, where you would have definitely been tightening your stops if you hadn't already at 0.5, was 3.426. So when it hit this, basically this bar right, I want to see here, we get this right on the money, right there. That bar said tighten your stops. You tightened your stops, you tightened them again, you kept tightening them, you got knocked out, and now you're basically right, sitting, pretty close to the lows of the day. So it really helped on having your profit targets. And looking on over and checking out oil. Oil is just, zig-zag, nothing going on in oil. So if it's flat like this, what do? Well, check out possibly some premium selling on the binaries. Binaries, you not only can pay the premium, you can collect the premium. So in deviation levels, sometimes can be a good way to check out, a way to do that. Now, if you're doing a premium selling strategy, it's a higher risk, lower reward with the expectation of a higher winning ratio or higher profitability ratio, I guess you could say. So meaning that you're expecting more trades to profit than to lose. Even though you'll make less money when you profit than you lose, and you lose more when you lose, you're basically going in there saying, hey, if I win 70 or 80% of the time, it could pay for itself. And that's a whole different course. Make sure you know what you're doing on that. It's fun. It's easy to implement, but you have to have the right numbers and you have to play them consistently so the ratios and the averages work out in your favor. But anyway, so you could look at short-term ones right there as a possibility on how to do that. Also, when it's like this, you can get some really, really volatile binaries. Let me see if I can pull one up right here. I'll show you this. There we go. Pull up my Nadex platform, and we'll go over here. And by the way, hit refresh. That'll shrink everything for you. It makes it a little bit easier. And we'll go to commodities binaries. We're going to hop over to crude oil, and we'll check out the ones that expire here in like 10 minutes. Okay? So we're on these right now, and we got oil sitting at 91.84. When we come back, I'll go ahead and I'll talk about some ways to do some short-term binary trading here in for just a few minutes before we wrap up for the day. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, looks like we got a caller on the line. Let's go ahead and roll on over to that. We got Steven out in New Jersey. How's it going, Steven?
Okay, very good. A quick question. If we were expecting, let's say, some retracement of today's advance in the S&P, so
right.
We wanted to maybe take short. Would if you look at the daily 300 points, 300-point dailies, one of the you could go short one with the ceiling at 45.
Correct.
Would that be? I mean, that's pretty cheap. I mean, that's like $5-6. Would that be a better strategy than maybe? Would you prefer that, or prefer using a binary?
Well, you have a couple things you have to look at. If you think like right now you're at the money and you think it's going to go lower, okay, and you don't see like, and you're very confident in your opinion that it's not going to close at this level or higher, okay.
Yeah.
In that case, a binary may work better for you. The reason is it just needs to go down a little bit, okay? And if it does, like let's say you do an at the money binary, like basically right at where the
even you have more risk then inherently.
You do have more risk. So, but you have two types of risk you got to look at. So on the spread, on the spread that you've chosen, right there, you also have a 5-point break even risk. So you have $5.
Too far? Yeah, is that too far to think that would be logical?
Well, I mean, it's not too far in the sense of like a deviation level shows that the market definitely retraced that far.
Yeah.
It's just, I don't like, I mean, today's news is pretty positive across the board for a lot of things and drove the market up. So I don't know if we're going to get a full retracement back down. So even though your risk is only $6, and this is really one of the things that I struggled with too when I started trading Nadex was you see that low risk and that sort of grabs you right at first.
Right.
But you got to combine, time risk and then break even risk and dollar risk. And so now you may go, well, let's just say it does move down 5 points. Is there, what's my risk on a binary? So you may go over and find a binary that has a similar risk that might have a better reward if it actually got that far down.
Right. It's probably about $20 risk on that one on a binary if you sold like an 80 or something like that.
Right. So if you sold like an 80 and you put $20 at risk, then that'd be 3 times that amount. But if it got just down to 1440, basically less than or equal to 1445, then you would be looking at a $80 profit, which is less than this. But again, that's if it moves down 5 points. If this moves down 5 points, you're a break even on your $5 risk.
Yeah, because it's a pretty close call between the spreads and the binaries in a lot of instances. Yeah,
and it's all about like what kind of trade you're looking at doing. Like when you're looking for the trending trade and you're expecting a lot of movement, I like the spreads. Or if I can get a spread that maybe like in the last 5 minutes of trading, the spreads can be a whole lot better. Not in just last 5 minutes, but like 30 minutes left till expiration. Because the less time there is till expiration, then basically the less premium that's in the trade. So.
Okay.
Like looking at 1450 right now, and looking at that trade, now that only expires in 62 minutes, but it only has to move 1.5 points. So there's only 1.5 points of premium versus 5 points of premium in there.
Right.
So the other one has very little risk, but that's because it has to move so far to be a break even.
Right.
So it's interesting as we go through it, but it's a great question. It's one of those things that. I'm constantly. That's why I built like the scanner. We're going to add in a binary scanner too. We're going to be releasing that out here in the next week, and we're going to, or at least the spread scanner in the next week, and then we'll add the binary scanner in. And the reason is to help you find out of all the trades which one's the best. And like I said, the spreads are hands down my favorite when I'm trading directionally. It's just you got to make sure that you have a correct expectation on how far you think the market's going to move, and is it going to move far enough so you can be profitable on that trade. And sometimes it barely has to move at all. I mean, some of these I'm looking at are 0.3.
Sure.
But other times it may have to move 5 points, and I might be, even though the risk is only $5, the probability of me even getting that $5 back is pretty low, so I may not want to take that trade.
Okay, well, thanks a lot. I hear the music, so I'll talk to you again.
Oh, no problem. Feel free to give me a call back tomorrow.
All right, bye.
Hey, thanks. Appreciate it, Stephen. All right, well, everybody have a great day. I will see you tomorrow from 1 to 2 Eastern, 12 to 1 Central Time, right here on the Diagnostic Trading Hour. Make sure to stay tuned. We got a great show coming up for you right after this commercial break.